Hey there, Dave here along with Chris and Jordan. Welcome to our special live earnings reaction video. We're just about 5 minutes away from the market's closing today. We're expecting Google, Alphabet Inc. to release their Q1 earnings shortly after the close. Those results could help us better understand the impact of the pandemic, particularly how it's affected online advertising. Despite Google's traffic soaring in some areas, Chris has made this big bet that advertising will be destroyed by companies pulling their ad budgets. So Chris, let's talk about your trade.
Right. I can barely breathe right now. I'm short of breath, and I don't even know why, because yes, it's a big trade, but I mean, considering what's happened to my account since, mid-February, it's, I can lose it all right here, and I'd be totally fine relative to the past big trades I made.
So when did you make this Google trade?
I've been working into the trade for the past, 2 weeks now. I think I started a couple weeks ago. Short 2,000 shares of Google. And then I picked up 100 was it 10 or 100 put contracts representing another 1,000 shares in the money, like 40, 50 bucks in the money. So basically short 3,000 shares of Google, but 1,000 of those, there's worst case scenario on 1,000 of those shares is 40, 50 grand. So the trade is positive so far. We did a whole show about this, yesterday? We did the whole show about the strategy behind this trade. We're short Google, long Amazon. That's what it is. There's 100 reasons for it, but we're not high conviction. I mean, I'm prepared emotionally to lose on this trade. Like there's just a lot of things that you can't really gauge on this trade, how the market's going to react, kind of like Netflix. One word in the briefing can send the stock in the opposite direction you think it should go in. Dave, what are the expectations? We were talking about this. What are the expectations say? Now, there's real important Q1 and Q2. Today's on Q1, which is not actually important right now. It's more about guidance.
We're looking to see what else they might say. We're going to see what kind of hit their ad sales had in the last few weeks of Q1. But the consensus estimate, it kind of depends on where you look, but I've seen $10.86 per share or $10.33 per share. I've seen as high as $14.46, as low as $8 or even $6. So it's kind of all over the board. That's on the earnings per share. Their revenue, I'm seeing numbers around 40 billion is the expectation. I'm looking over on Benzinga right now. They are at $10.33 for the earnings per share and 40.38 billion on sales. So
but more important, I think the street projections on advertising next quarter, Q2, the one we're in today, is somewhere between -1% year-over-year comps and -20% year-over-year comps on advertising.
Yeah, and you made this trade because you believe the market hasn't fully realized how bad advertising spending is actually going to be affected by the shutdown. And, let's talk about some of the things you looked at specifically.
So I mean, and by the way, I don't think, Dave, if it comes in closer to down 20% year-over-year, I don't think the market is prepared for a number like that, if Google even is willing to express that in their guidance. But I don't know for sure. Have you ever gone into an earnings report less sure about market expectations and what would move the stock? That's why this is a really dangerous trade here on either side.
And the first thing you sent me a few days ago, this was a tweet that you sent that Booking.com and Expedia canceling out $10 billion of advertising.
Yeah, it's amazing. And Amazon canceling their advertising, which I have to imagine Amazon's got to be one of the largest advertisers on Google. There's so many, right? You have so many things going on. You have the travel sector, entertainment. You also have small business. You have startups that consume about 50% of their advertising is Google and Facebook. They're getting hit all over the place. We've never seen anything like this. So my gut still tells me the risk reward, I like it on the short side more than on the long side. And because we are so long Amazon, it made sense for me to take a little bit of risk on the short side here, a little, more than a little, on Google. I also, by the way, I did some more trades today. I went short Starbucks for earnings. I went short Trade Desk tonight, kind of as a parallel trade to Google. So we'll see what happens there as well.
You showed me this report where it's basically showing the change in advertising spending in the last bit of the quarter on Facebook, where we see that arts and entertainment, nonprofit, some actually increased their spending, but the big spenders in advertising, travel, real estate, automotive, all of those are down. Travel down 86%, real estate down 68%.
We don't know the integrity of that data, but it seems to be correct. It seems to sync up with most of the other reports I've seen. But more important than that data is the next slide that I think you have for us, which is what is the breakout?
Yeah,
right.
This is how much money these industries spend. So retail, biggest spender, $33 billion. Automotive, $18 billion. Financial services, $18 billion. If you take how much was expected to be spent in 2020 and reduce it by the amounts in that Facebook report, we're seeing that spending across the board would be down 19%
in Q2. Dave, is that your spreadsheet? Did you make that?
I made that based on the previous two graphics.
Well, thank you.
Well, I was trying to figure it out myself, and when I had a spreadsheet trying to figure out the math on, well, just how far down is advertising spending potentially going to be, I decided to turn it into a graphic for this very show.
Yeah, this is going to be interesting. What are we looking at right now? I'm pulling up.
It is now. The markets are closed. Let's see if we can find the report.
I can barely breathe. I feel it's the start of the most exciting earnings week that I could recall ever. Right. And it's just like there's so much anticipation of it.
A lot of people in our chat room.
God, of course, I can't even pull it up right now. So, wow, Google's down 42 for the day, but that's irrelevant. It's all based on. I feel like the market's going to have a hard time interpreting whatever Google comes out with here. So, whatever it hits in terms of instant reaction, I'm not so sure I would trust it. Kind of like Netflix. Remember Netflix, their earnings, slam dunk those earnings. They killed it. They were up huge after hours for about 20 minutes and then came all the way back to close down. It was spectacular. But that was because of a single line in the earnings report that essentially said it was a pull forward. Now, what if Google, as we anticipated, shows a really bad forecast for Q2, but they comment and essentially say that they're seeing a slight lift in the last few days or the past week that would make them think that they'll be back to normalization by the end of the year. That's the type of thing that could really send the stock up.
And that's what we're looking for, is any kind of what is the future of advertising online? And we know that Google, 80% of their revenue comes from advertising. And so it's a make or break for this company.
Yeah. And I'm just refreshing right now.
I'm refreshing. I'm on the investor relations page.
Here we go.
I need to go exercise after this.
First quarter
Benzinga doesn't have it
share,
yet.
987.
Wait, what, Jordan?
987 first quarter.
It's up $30. Okay, let's see.
Yep.
987.
Yep.
Up 50.
Ooh, this is crazy.
Yeah, they're up immediately.
Well, let's try to extract this from the report.
Yeah, I just saw the headline. I don't see the report yet.
Oh, they recovered the day's losses. Not really accelerating beyond that initial reaction much, up 46. I can't find the report. Where are you pulling that? Are you just seeing the headline?
I just see the headline on TD Ameritrade.
Okay. I can live with an up $42. That wouldn't bother me at all.
Yeah. It's sinking back down. So
I was hoping that we don't have an up 200 here. That would kind of stink for me on the short position. I'm willing to live with an up 42 if it stays there.
Yeah.
I got to see this report, guys. I'm curious what. Oh, so
So
frustrating.
Google closed down nearly 3% for the day, and we're seeing they jumped up
You got a revenue number?
more than that in after
No.
hours.
All I have is
Trying to
that.
find
All I have is the share number, the per share number.
Starting to drop. I like that.
Okay, so a person on StockTwits is reporting revenue of 41.16 billion versus 40 estimate.
Again, Q1 numbers are kind of irrelevant here. I want to see, do they have projections out?
Here it is. We've got actual numbers. This is from Alphabet, their website.
Okay.
So let's read this together.
Let's try to. I'm trying to read here.
Given the depth of challenges so many facing, it's huge privilege to be able to help at this time. People relying on Google services more than ever, and we've marshaled our resources and product development in this urgent moment. Our business, led by search, YouTube, cloud, drove Alphabet revenue to 41.2 billion, up 13% versus last year, or 15% on a constant currency basis. Performance was strong during the first 2 months of the quarter, but then in March, we experienced a significant slowdown in ad revenues. We are sharpening our focus on executing more efficiently while continuing to invest in our long-term opportunities.
How much down? And projection.
Do they have a number to that?
At the end of the report, they should have projections. Scroll to the end. Let's see if we can get to the forecast. I haven't read a Google report in so long, so I don't trade Google actively anymore. Let's see. Not
They're just talking about their financing measures. Okay, let's see here.
You see anything on StockTwits, Jordan?
Let me pull it up.
I'll pull up StockTwits too, see what I can find here. Suppose we should look at our own comments and see.
They're just saying "Rip, Chris."
Google skyrocketing.
Hey guys, if Google only ends up 45 up after hours, that's even for the day, which would put me even. So I'm fine with that. But let's see what happens here. No guidance in PR is what I'm reading on StockTwits.
I couldn't. There was no guidance in that press release.
That is,
other than saying that they are sharpening their focus and had a significant slowdown in ad revenues.
No guidance. That pisses me off. Are you kidding me? Come on, at least for the quarter.
So they beat on revenue. They missed on earnings. So
they have got.
We'll have to wait. So we may have to wait for the conference call, which starts in 22 minutes.
Okay, guys, they can't not even hint at where they are last week of the quarter or first part of this quarter. They must address that. That is the biggest. Listen, you don't want to have guidance, don't have guidance, but you have to address the elephant in the room, which is how hard is their advertising getting hit?
Yeah.
How hard is it getting hit in that last 2-week period of the quarter? If they don't address that, I would be shocked to see the market kind of swallow that tomorrow. Shocked.
They historically have not broken out their advertising across different segments. So they just told all advertising altogether. They now are breaking it out into search sales versus YouTube ads versus off network.
So we are net right now down 50 cents on the day.
Yeah.
Day and after hours.
I mean, it's bouncing all over the place. Though,
yeah, it's bouncing all over the place. Now we're down $5-6 for the day. I'm totally fine with that. My gut tells I need to see someone, and this is going to drive me insane if they do this conference call and the analysts don't push them for that number. It will actually. I'll put my fist through the screen.
The analysts have to. They have to address this in the conference call. Yeah. If not in the first, I think that it should be addressed in the opening statement by the CEO or whoever is.
Do you want to put? Could you put CNBC on, Dave? Can you pull it in there? Okay.
Yeah, hang on. Can you guys hear that?
No.
Okay, give me a second.
Not that I really care what they have to say, but I want to make sure I'm not missing something. Okay, so I did a couple baby trades today while we're waiting. Let's see how those are going. One is Starbucks. What's
So that
happening?
one looks kind of neutral to me. It's at least the stock reaction is just hanging around at 750.
Okay, it was a small trade. Okay, whatever.
Take you through some of the comps numbers here. Obviously, very much impacted by the COVID-19 pandemic. Global comps down 10%. That's slightly worse than analysts had anticipated. U.S. comps down 3%, partially offset by a 5% increase in the average ticket. China comps fell 50% in Q2. That is the company's second home market. Obviously, a big drop there. Loyalty rewards members now at 19.4 million active users in the United States. It's important to note here, Starbucks was having a very strong holiday season. Then the COVID-19 pandemic hit and forced it to close more than 50% of its stores. They're slowly starting to open back up. In China, they are nearly back open at 100% capacity. In the United States, we're going to start to see a slow reopen beginning in May. We've heard about, different formats of stores opening up with drive-through, mobile order and pay. So we'll expect to hear a little bit more color on that and what that might look like.
Okay, we don't care about Starbucks. Get back to Google.
Looks like operating
and I don't care what Google did in Q1. And I swear, if anybody spends more than 1 second talking about their Q1, like I'm reading a report, their stock rises on revenue growth. I mean, no one cares about Q1.
Yeah.
But they're avoiding Q2 in the report, it looks like. So it's all going to come down to the call. All coming down to the call.
Yeah.
So frustrating.
Thanks so much for that, Mike.
Okay, let's see if maybe they're going to...
Guys, in our comments, don't worry about me. Like I said, if I would be hurt if Google was down a couple hundred points right now. I'd be sweating a little bit, more than a little bit. It'd be a really bad day. What?
Yeah, you mean up couple hundred points?
Yeah. I'm sorry. If it were up a couple hundred right now, it'd be a really bad day. If it were down a couple hundred, it'd be an excellent afternoon. If it's sitting around here at roughly even for the day, I'm fine. So it's not a concern. Although I would love it to be down.
I'm seeing the after hours chart. It looks like we're up about 4%, 50 points to 1288 after hours.
Yeah. Yeah. So
so we'll keep an eye on that. And
I as far as I'm concerned, there's been no report yet. I mean, there's been no. The market should only care about one thing right now when it comes to Google, and that is getting some insight. Let's see what he's saying. So, can you hear that, Dave? No.
Oh, here I'll
getting some insight into.
And Mike, where does that kind of put you as to coming into this? Whether the market was bearish expectations for these types of stocks or optimistic?
It's actually, it was sort of longer term optimistic, but shorter term, I think there was on guard for the potential for some choppiness and some noise in the numbers. I mean, the Google move itself is really just capturing what was lost today. And so I don't know that that's really giving you much of a clear verdict on exactly whether this is going to be some kind of inflection point quarter. Seemingly not.
I'll just hit Mondelez numbers, guys, which are out.
I don't want to hear about Mondelez numbers.
Beat here.
All right.
At least on the
No, it's so frustrating because what's so frustrating about CNBC is they're barely even investors. Some of those guys are not even investors. I'm not sure if they've ever actually invested in their life.
Well, a lot of
and I think the ones that were investors, I think they don't invest anymore. I think they like Kramer runs a charitable trust.
Well, the guy that was just talking, I always look all these guys up. He's been a journalist, a financial journalist, his entire career. So he's never at any point been an investor. But they don't understand the marginal driver of price. The marginal driver of price for Google right now is the depth of pain of their primary business from the start of the pandemic, which would have been about 2 weeks prior to the close of the quarter. So that's all we care about. That's all we want to hear about. That's all I want to know. Google did not address it except for like one line where they said vaguely,
significantly down. That's all they've said.
Thanks.
Significantly down. We need more information than that. And
Jerks.
I think that we'll get it. We will get it in about 15 minutes.
You think? But are we though? I mean, I'd say it's 50-50 because saying we're significantly down is such a cop-out. They could have easily have stuck that number in the report. The only way that they would have not have stuck that that number in the report and then release it during the call is if they want to control the dialogue and how they release it, which I understand. That's fine. I hope that is the case and they do release it during the call. And by the way, if they say that their revenue is only down, ad revenue is only down 10%, or 12% or 13%, I'm covering that position like immediately. Immediately I'm covering my Google short. Yeah, because if they're able, I don't know how that would actually be possible, but you never know. You just never know behind the scenes who is increasing their ad spend in this space. It's, I guess, theoretically possible. So I want to hear it from them.
Yeah, and CrowdStrike is advertising like crazy, right?
Exactly.
So there are people that are advertising.
Yeah. So my analysis didn't lead me to believe that would cover the downdraft, but you never know. So that's what I want to know.
Yeah.
All right. So guys, no. Josh, Theora 316. No. The 2.5 million was not an options trade. That was a straight short trade. So what that means is that shorting 2,000 shares straight, then another 1,000 shares through options. So the straight short, you only lose money if the stock actually trades under where you initially shorted it, which it's not right now. I think it's roughly where I shorted it at right now.
And then Danny H asked if Dave or I covered or traded this at all. I think we're both long Google, right?
Yeah, I own shares in Google. I own, I think, 300 shares of Class A and some Class C as well.
I own some
I did not
A's.
play
I don't
this.
remember how much. I'd have to go look at it, but
yeah. So I really do feel that this thing is going to move one way or the other on this conference call. Are we able, guys? We
are able to listen to their conference call, and they have started playing music on that feed, so I'm monitoring that for us.
Okay. So guys, if you're watching, we will broadcast the conference call, comment on it in real time. Stick with us. This is
the first time we've done a live earnings, so the technology is still a learning curve, but
Google has not actually reported earnings yet. they have.
Well, they've given us some numbers, but they haven't told us what we care about, which is what's next. What do we have to look forward to?
Yeah, guys. What that's kind of referred to is the marginal driver of price. You know, the thing that investors are actually looking to significantly increase or decrease their interest at the current price point, right? Of a security. And in this case, well, in our opinion, at least, it's one thing and one thing only. And it's the degree to which Google advertising is getting hit right now, post-pandemic, since the beginning of the pandemic, which doesn't really come up in their Q1 earnings, which they reported.
Yep.
So, gosh, I'm getting terrible internet today. I'm trying to refresh this quote here. It's all over the place. What are you seeing on the quote right now? An hour about even for the day again. Okay, so guys, let's just talk. I did do some other trades today. I did a lot of trading today, actually.
Why did you do so? I can't believe you did this much today.
So I'll tell you why. I needed to kind of clean up some stuff. I'm just going to go through what I did. I'm trying to pull it up right now. Hold on. I want to pull up my filled orders for the day. So I did short. I got some Starbucks puts. They're in the money. If we can get a $2 move in Starbucks, I'll be making money. I don't know where it is right now.
Right now it's at 78.
I'm probably close to break even on those, so no big deal either way there.
Yeah.
Did Ford come out with earnings yet?
Yes, they did. They missed, but they're up 11.
They're up. I bought some more calls in Ford. So
yeah.
Where are they at? Tell me.
They're 529.
That's not up. That's down from.
Is it down?
Well,
it's
yeah,
up, it's up down intraday, up from.
Okay, whatever. So
yeah.
I is a small trade. I lost on the options. On those options, I'm probably down 35% of what I paid for on those options. I am still way up in Ford because we started Ford when it was at what 489 or in the 490s. So we're doing well on Ford still. I wasn't expecting too much today out of Ford.
I just want to make sure. Can you guys hear that music?
Yep.
Okay. So that is the conference call music, and we will have that as soon as they are live. We have it.
I actually, I'm up in my Crocs, and I took profits in half of my Crocs position. So I sold half of my Crocs today. I took 1,000 of my 7,000 shares of Apple. I actually have 7,900 if you include my retirement account. I took 1,000 of those off the table. I felt like I was just a little bit too long Apple going into this week. So just kind of a maintenance issue for me.
I mean, this is the kickoff to every giant tech company's earnings. So Google's the first to go, but we also have Microsoft, Apple, and who else?
Speaking of Microsoft,
Amazon. They're all releasing this week.
I sold half my Microsoft. I just felt like I just felt like I'm in so heavy on Amazon. But you know what I sold all of today, and I had massive profits. I can't even believe how good this trade worked out. Do you remember our trade on HEAR here, Turtle Beach earphones?
Turtle Beach.
That company doubled in like 2 weeks. 2-3 weeks, I doubled my money. I almost doubled my money on a straight equity trade in just the last few weeks. And I didn't even know that until one of our subscribers like tweeted me like, "Nice job on here." I was like, "Nice job."
Remember to sell this.
Yeah, so I sold it today. I'm like, I'm good. I thought that stock needed to have its day. It was a pandemic trade that wasn't getting recognized, and it finally got recognized. Yeah. So I'm out.
That's good. Today was not a good day for most of our holdings. You know, Amazon being down 2%, 2.6% really doesn't help us out too much.
Dave, I took some Roku off the table today.
Did you?
For no reason. Then I think we're starting a new phase of this pandemic, and I call it the "we think we're getting back to life" phase. I don't know that it's real or not, but we're in Texas, guys. If you're watching, we're in Texas. We are opening up Texas like in 2 days, and we are seeing it happen in front of our eyes. Now, we're pretty conservative, me, Dave, and Jordan, so I don't think we're going to be out at bars ourselves and movie theaters, but I know a lot of people that are. I know restaurants that are booked for this weekend. So I actually took some money off the table.
The rule here in Texas is they're opening up restaurants, but not bars. Restaurants can open at 25% capacity, which still, I don't know how a restaurant's going to survive at 25% capacity.
2 weeks only, and then they're going to go up to 50% after 2 weeks, though. Okay.
Yeah.
And you know everyone's going to cheat that. We won't at Chelsea Corner, but other people will cheat that. But I took some of my short trades low. I lowered them a little bit on all those restaurant stocks because I want to be in them deeper, but I feel like they're going to continue to pop over the next couple of weeks when more states in the South have their coming out parties. Guys, if you're in other parts of the country and you're not seeing this, in the news this weekend, you're going to see all these stories in the news with restaurants that are crowded and stuff. It's going to be a huge news story. I think it's going to help all those restaurant stocks, even though I'm not buying it at all. I think companies like Dave & Buster's, companies like Ruth Chris Steakhouse are screwed. And I think if there's any second wave going into the fall, even without a big second wave, I think their business is going to be down so much, they're still at risk of bankruptcy, okay?
Chris, I do have the Q1 earnings for Ford in now. It looks like they were expecting to have a 12-cent per share loss, and they missed that. They came in at a 23-cent per share loss, so an 11-cent miss on an earnings per share basis there. Their revenue expected to be $32.54 billion. They came in at a miss there too by $1.2 billion, $31.34 billion on the sales at Ford, missing by $1.2 billion.
I see the top line, a $2 billion first quarter loss for Ford.
Well, none of that is not expected, though. Right. All anyone cares about when it comes to Ford is when they're planning to reopen, right? Yeah. And that's it. Yep. So Ford is still 519. That's fine.
After hours, they're down 2.23%. right now. They were up 4% for the day, though. So
Yeah, they had a strong
they
day.
gave back half of that.
Yeah, strong day.
What other earnings were we interested in today? This morning we saw that Southwest beat on earnings, missed on sales. We saw that Omnicom beat on earnings and sales.
Okay, now Dave, Jordan, again, these are all Q1 numbers. It's so ridiculous. But are you guys? I am out of my American Airlines short. I got out just in time. Okay, because they started to go up today. Are you guys long or short any of the airlines, or are you just neutral?
I'm out. I'm not touching them for a while.
Yeah, I've not touched any travel at all. I had some short positions, but I have closed all of those at this point.
I bought JetBlue a while ago, sold it. I made a little bit. I could have made more if I'd have sold it sooner, but you know.
Okay.
We can talk about our portfolio. Let me sort by percentage. So I'm long Amazon. That's my most substantial holding, 41% of my portfolio. I'm lost a lot of money in that today, as they're down 2.6%. Plus, I have some options expiring in a couple of days. That's not good. I
sold those options today earlier this morning.
Did you?
I was just so long Amazon. I needed to kind of pull some off the table going into earnings. I intend to potentially put it back on the table before earnings. I was hoping in a really poor performance by Google tonight that would take the tech sector down to give me another window to get into Amazon cheaper prior to earnings. That doesn't look like it's happening yet, but again, I'm not so sure. We'll see if Google holds up based on commentary.
Shopify was up today. I'm big percentage of my portfolio is that over 10%. Apple is 10% of my portfolio. It was down today. I'm still in Teladoc. I'm still in Google. I'm still in Hasbro, which was up today. They have earnings coming up this week.
Yeah.
Hasbro's doing incredible, guys. I mean, incredible. That was a big thesis of ours. Toy sales seem to be way up, but can the e-commerce sales that they do make up for the 80% of brick and mortar business that they're losing? That's the big question.
And that's something we might get some insight into tomorrow morning before the market opens. Hasbro is reporting, along with some others. Royal Caribbean is reporting before the market. Boeing, American Tower, CVS. I hope that's not a dry cough.
No, it's sneeze.
What else do I have? I'm in FLIR Systems was up today.
FLIR's doing
up
great.
Nearly 5% today.
FLIR's doing great. I'm glad we ended up all going long FLIR. I do think we'll likely see continued momentum in FLIR through the quarter as they continue to sign new big deals. That was our thesis, right?
So what are you calling this next phase? The we want to get out of the house phase?
Yes.
Because FLIR could benefit from that because as businesses open, as offices open, and they want to do some proactive measure, one of the easiest things they can do is take people's temperature as they walk through the doors.
So, Dave, I had a long talk this morning with one of my friends in the industry up in New York, and it's, their sense of what's happening on Wall Street is very different from us down in Texas because, what he told me is everybody they know has someone in their family or friend network or neighbor network or work network who has COVID, who has it, who's been hospitalized or who's had it pretty bad, right? Who they've all been nervous for. So it's closer. And I think they're not seeing what we're kind of seeing in the South, which is people for good or bad. I'm not saying it's the right thing to do, but there are a lot of people that are anxious to get out and start spending money and doing all that stuff. You're going to see it on the news this weekend, and it's going to start to spread, right?
Yeah. And we already saw California beaches were loaded up with people, even though that's a big controversy there. Let's look at some of our comments. Cruisers are going to cruise. I see.
So Danny H wants to know about one of my favorite companies, Five Below. Am I picking up Five Below? Danny, I'm not going to pick up Five Below because I just feel like Five Below has zero. There's a general rule on Wall Street right now, and kind of the thesis that they all have is a company needs to have 60% of their business be e-commerce to kind of survive and thrive through this period. Five Below is like 0% e-commerce, right? It's like 1% e-commerce. And so I know we're going to open up some, But I don't care how much we open up this summer. I don't see Five Below getting even close to where they need to be in terms of sales. And I'm just staying away from those guys. I love the company normal day, but not during a pandemic. No way. And you don't need any of that stuff. You can order it all through Amazon and Target and Walmart if you want it, right? For the most part.
I'll just let everyone know that we are watching. Google is right on time. It is now 30 minutes after, and they have started a pre-roll video.
Oh, it's a propaganda video.
It's a propaganda piece to let us know how great they are at connecting communities.
But Dave, Jordan, let's talk about one of my biggest longs right now, Peloton. Oh,
Yeah,
by the way,
down
in addition,
today. I almost picked some up today because they're down 5%.
you should have.
I know.
You should have, dude.
I might do it in the morning.
Peloton.
Yeah.
And also, that little bicycle stock in Canada is doing pretty well. I mean, it's so small. The float is so small. Who knows?
There's just no volume on it.
There's no volume. But what did it do today? It's like up reasonably well, right? What's it called again?
It's Doral.
Yeah. I looked at that. They were up big today. I was really surprised. They were up 12.7% today.
Yeah.
Go Cannondale and Schwinn.
Basically a penny stock that owns a bunch of bike brands.
We never trade that stuff ever, but I did.
That's
this
why
one
I stayed away from it. If their entire market cap is $60 million, I can't trade that.
we make too big of a trade in those guys, and we're getting calls from the SEC. No, it's a small trade. We'll see what happens.
How much have you made? How big was your trade?
It was $30,000. So I mean, I'm up
so
like
you made,
I don't know, 4 or 5 grand, 4,000, 5,000. There's nothing. Let's see. Google's pretty consistent at just kind of even for the day. Right now.
I think that's right for what they reported, and then you just wait until you find out what happens, and then you can make a move.
Yeah, I mean, I can't even say why it was down to begin with today or up. It's kind of all speculation, so it's irrelevant. I don't think anything matters on a Google price movement until they talk about Q2.
Yeah.
So it's all kind of irrelevant at this point. And if they don't talk about Q2 enough, it's the analyst for not beating them up over it and forcing them to talk about it. Could you imagine me as an analyst on a conference call if I got to ask a question?
Why don't we do that? We should. I mean, they allow not just analysts, but they allow media on those calls.
I would be blacklisted within 5 seconds of my
You've probably
first call.
already been blacklisted. You used to call into some of those. I remember those days.
Oh boy.
So we have people asking. Someone thinks next Tuesday is Disney. Are we gonna be doing anything on Disney? How about the oil tankers? Are you still in that oil tanker stock, Chris?
No, I was in and out of that thing in like 24, 48 hours. You know what though? Disney. If I might short Disney in the next. I could get killed on these shorts these days, but like I sold 3/4 of my Disney. I had 1,000 shares. I increased it to 4,000, and then I cut loose and I went back to 1,000. Yeah. I don't know, man. I don't love Disney right this second. Could you see them opening parks this summer?
I mean, I can see them trying to open parks. I can see. Yeah.
Maybe
Jordan, what do you think?
I mean,
I don't know. Maybe in July. I mean, you just have to see what things. How does it go in the next 2 months?
Yeah, maybe they
restaurants open up. I don't know.
Maybe they open in July. That would be, by the way, that would be big news for Disney if they do open up in July. But
0% they open cruise ships before, I don't know.
Ever next year.
Yeah, I don't
know. By the way, are you playing Disney music in the background, Dave? What is that?
It's whatever they're playing on the conference call for Google.
Tim White.
It was getting louder though, so they might be about ready to start.
All right, Tim White at 333. Oh, Dave, and Jordan, we all have straight up equity stock in Apple. None of us are trading options in Apple.
Yeah. And I saw another question about Microsoft.
What about Microsoft?
Just if we had any plays. But we have the call starting now.
All participants are in a listen-only mode. After the speaker's presentation, there will be a question-and-answer session.
Can you all hear?
To ask a question during the session, you will need to press star 1 on your telephone. If you require any further assistance, please press star 0. I would now like to hand the conference over to your speaker today, Jim Friedland, Director of Investor Relations. Please go ahead.
Thank you, Candice. Good afternoon, everyone, and welcome to Alphabet's first quarter 2020 earnings conference call. With us today are Sundar Pichai and Ruth Porat. Now, I'll quickly go over the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance, including the effect of the COVID-19 pandemic on those areas, may be considered forward-looking, and such statements involve a number of risks and uncertainties.
Does that mean we get forward-looking statements? Because I want forward-looking statements.
That's all we care about is the forward-looking statements.
They better deliver on those forward-looking statements. If they don't,
Our Form 10-Q for the quarter ended March 31st, 2020, expected to be filed with the SEC later today. During this call, we will.
I don't even care if I'm wrong, but I just want to know, right? You know what I'm saying? I just want to know how off the mark we were and why.
Yeah.
Don't hide it.
We have some pretty good rationale behind what we're
relations website
thinking, right?
Located at ABC.
You know, for our followers out there, I've been doing this since I started airing conference calls. I probably listened to 10,000 conference calls of company earnings reports, and you learn something on every one. It's the best way to learn this industry. You have to listen to every conference call.
Would change and how suddenly. Our thoughts are with everyone who has been impacted by COVID-19, especially those who have lost loved ones or their livelihoods. It's a challenging moment for the world. Through it all, we are incredibly grateful for all of the essential workers on the front lines of this crisis, from healthcare workers and first responders, to the grocery store clerks and delivery workers, to teachers grappling with new technology to help children learn remotely, to all the scientists and researchers working hard to develop vaccines and treatments, and many others who are leading through these difficult times. Thank you. These people fill us with hope and show us the power of human resilience. We'll need that energy and resolve in the months and years ahead. Today, there is still a great deal of uncertainty regarding the path to recovery, but there are some things that we can understand better with the patterns we are seeing. For example, it's clear from data that people are being more cautious and are seeking authoritative advice and guidance to protect their family's health and safety. A return to normal economic activity depends on how effectively societies manage the spread of the virus. There is no one-size-fits-all, and the timing and pace of recovery will vary from location to location. This is a long-term effort. It's also clear that this is the first major pandemic taking place in a digital world.
Dave, could you get a live stock chart after hours? Like I have one on Ameritrade. That would be cool to watch. I'm watching on my phone right now as he's talking.
Online shopping.
Kind of a cool graphic to watch.
Actually, can you share your screen? I can only share one screen at a time.
I have it on my phone, but let me see. Let me see.
Like AI, Bluetooth exposure notifications, and 3D printing are being used to help fight the disease head-on. It's now clear that once the emergency has passed, the world will not look the same. Some social norms will change, and many businesses are speaking to us, looking to reinvent their operations. We've seen that the most pressing concern of small and large businesses right now is business continuity, solving for issues like employee safety, dramatic falls or surges in demand, supply chains, and managing a remote workforce. Ultimately, we'll see a long-term acceleration of movement from businesses to digital services, including increased online work, education, medicine, shopping, and entertainment. These changes will be significant and lasting. Given the depth of challenges so many are facing, it's been a huge privilege to be able to help people and businesses at this moment. In today's call, I'll cover 4 areas. First, I'll mention some of the ways we have marshaled our resources in product development to help. Second, I'll talk about how people are using our products at this unprecedented moment. Third, I'll talk about our business, especially our advertising business, which was significantly impacted in the last few weeks of the quarter.
Significant. Once again, that's all we're getting so far.
I can't even log into my account. It's the weirdest thing.
In the early days of the crisis, we were able to put in motion a number of efforts quickly. This is a testament to strategic areas where we have invested over recent years. Products that people trust, our technical leadership and innovation, deep partnerships, a highly skilled workforce, and the scale and resilience of our operations. have been proud of all these efforts and what they say about our company. I'll give just a few examples. First, we've been working with healthcare providers, researchers, authorities, and communities to help combat the virus. Our community mobility reports help authorities see in aggregate how social distancing requirements are working. Verily has tested thousands of people in California and has partnered with Rite Aid to bring free testing to 8 additional states. Google Cloud is forming deep partnerships, such as with leading healthcare provider, HCA Healthcare, to understand data around ICU bed availability, ventilator supplies, and test results. And you may have read about our exposure notification partnership with Apple, designed specifically and carefully to protect users' privacy while helping public health authorities and governments manage countries' reopening. Second, we are working hard to provide accurate and authoritative information to people using our services. In search, we have launched a number of features such as up-to-date answers from health authorities and remote medical care options. On YouTube, we are quickly removing content that violates policy and raising authoritative content from news organizations and experts. Up to last week, our COVID-19 info panels have had 20 billion impressions. Third, we are playing a role in supporting businesses and workers that are hurting because of the downturn. In March, we made a commitment upwards of $800 million to support small businesses and crisis response efforts through a combination of grants, small business loans, and ad credits. And the Google News Initiative is offering financial support to thousands of small, medium, and local news publishers through a journalism emergency relief fund. We've also waived ad serving fees for news publishers globally on Ad Manager for the next 5 months. Turning to the way people are using our products. People are relying on Google services more than ever. This is a strong recognition of the value of our products, particularly in important and urgent moments. As a few examples, we have seen a significant rise in search activity. To put it into perspective, in the US, coronavirus-related search activity at its peak was 4 times greater than during the peak of the Super Bowl.
Yeah, and we knew that there was
People
a lot
are
of search
spending significantly more time on their Android apps, with downloads
but
of
we want to know what
apps
their
from
ad
Google
rates have
Play
turned into.
rising 30% from February to March. YouTube watch time has also significantly increased. One area in particular is live streams. I hope you saw Andrea Bocelli on YouTube live on Easter, which has had over 39 million views. It was truly beautiful.
I wonder if he's going to mention dumb
100
money.
million students and educators are using Google Classroom. Double the
I
number.
can't even get on the Ameritrade app.
We've seen a
I mean, on the
massive
Ameritrade
increase
web
in demand for
interface,
Chrome.
show me live.
Analysts have reported a
It only works
400%
Hang on.
increase
phone app.
during the week of March 21st, year over year. And schools and businesses in particular are using our secure video conferencing platform, Meet. Last week, we surpassed a significant milestone and are now adding roughly 3 million new users each day and have seen a 30-fold increase in usage since January. There are now over 100 million daily Meet meeting participants. Stay tuned for much more. Turning to our business, let me touch on our performance this quarter. Q1 was in many ways the tale of 2 quarters. For our advertising business, the first 2 months of the quarter were strong. In March, we experienced a significant and sudden slowdown in ad revenues. The timing of the slowdown correlated to the locations and sectors impacted by the virus and related shutdown orders. As the impact of COVID-19 came into view, we delayed some ad launches and prioritized supporting our customers as many adjusted their strategies. We are focused on products where we can help most advertisers and merchants during the crisis. For example, under our new leader of commerce, Bill Reddy, last week we announced that merchants can list products in Google Shopping for free. It's been widely rolled out in the US, with more countries to come, and the response has been positive. Overall, recovery in ad spend will depend on a return to economic activity. There are 2 key aspects of our business that give us confidence about the future. First, as we saw after 2008, one of the strongest features of search is that it can be adjusted quickly, so it's relatively easier to turn off and then back on, and marketers see it as highly cost-effective and ROI-based. Second, our business is more diversified than it was in 2008. For example, cloud. In the public sector, we are helping governments deliver critical health and social services. We are supporting the state of New York's new online unemployment application system as it deals with a significant increase in demand. In retail, we have helped Loblaw, one of Canada's largest food retailers, and Wayfair scale to support exponential traffic increases. We are helping communication companies adapt to new behavior patterns. Vodafone is using Google Cloud Platform to help it analyze network traffic flows to keep everyone connected, and we are helping Unity Technologies keep real-time online games stay up and running. Institutions like Lloyds Bank are digitally transforming their businesses, and we are helping even more businesses do the same through new partnerships with Accenture, AT&T, and T-Systems. We now have more than 6 million paying G Suite customers. G Suite is helping Netflix and German manufacturer Kaiser Compressors transition quickly to remote work, while Twitter, Shopify, retailer Schnucks, and Italian bank Credem are using Meet for things like all hands and customer meetings. Elsewhere across the business, YouTube subscriptions continue to grow. The team has launched YouTube Kids in 15 new countries around the world since the beginning of the year and rolled out new features to make kids-focused channels safer. Android previewed Android 11, which includes seamless 5G connectivity and a smarter keyboard with a faster messaging experience. And as I mentioned, we have seen significant growth in Play. There are now over 2.5 billion monthly active Play devices worldwide. And in hardware, we saw a decline in device activations in the quarter due to falling consumer demand globally. But I'm excited about the product roadmap ahead for the year, including yesterday's launch of Pixel Buds 2. Finally, moving on to our focus for the rest of the year. We are taking a long view and continuing to invest in our long-term priorities, but are being thoughtful in the short term. So we made the decision to slow down the pace of hiring for the remainder of 2020, while maintaining momentum in a small number of strategic areas. We are also recalibrating the focus and pace of our investments in areas like data centers and machines and non-business essential marketing and travel. We'll also continue to thoughtfully manage our other bets portfolio. Waymo raised $2.25 billion in its first external investment round, a terrific validation of their technology and long-term business model. Wing saw a surge in deliveries and new users, increasing its daily volume fivefold with great momentum in test programs in Australia and Virginia. At Google, we'll continue to be focused on the 4 key areas that I outlined in the last earnings call. First, creating the most helpful products for everyone, particularly at a time where people rely on us for information, work, education, and entertainment. Second, providing the most trusted experiences for our users. This includes our efforts to tackle misinformation and digital threats, as well as our work to safeguard consumer privacy. Third, executing at scale. I've been proud of how we continue to work so cohesively and productively, even with a distributed workforce. We'll continue to build on the internal tools, support systems, and infrastructure we have built over the years. And finally, creating sustainable value. We'll be optimizing the way our data centers work and prioritizing strategic areas of investment where we need to support our users and partners. Let me express my thanks to our employees for their Herculean efforts under these difficult circumstances. While the road ahead for everyone is uncertain, we'll continue to support our users, communities, and partners, and we'll all emerge together from this moment. Thank you, and please take care, everyone. Over to Ruth.
Thanks, Sundar. Our results for the first quarter are a tale of two quarters, with strong results across our revenue lines for January and February, followed by an abrupt decline in March in our advertising revenues, as governments globally instituted stay-at-home orders in response to COVID-19. At the same time, even through March, our non-advertising revenue lines maintained their strong performance, particularly Google Cloud. I'll provide more details on the impact of the crisis as I review the Google segment revenue results and conclude with an update to the outlook that I shared on our fourth quarter call. Sundar and I will then take your questions. Starting with consolidated Alphabet results. In the first quarter, our total revenues were $41.2 billion, up 13% year-on-year and up 15% in constant currency, driven by Search, YouTube, and Cloud. Details of Alphabet's consolidated revenues by geographic region are available in our earnings press release. In short, advertising results reflect, in large part, the nature and timing of actions around the globe in response to COVID-19. The decline in APAC was more muted than what we have seen in the rest of the world, given the uneven impact of COVID, as well as the composition of our revenues in the region. The impact in the rest of the world began later and was more acute by the end of the quarter. In terms of the foreign exchange impact, exchange rate movements resulted in a modest headwind to reported revenues. Regarding our key expense lines, on a consolidated basis, total cost of revenues, including TAC, was $19 billion, up 19% year-on-year.
Just tell us about
Other
the last
cost
few
of
weeks.
revenues on a consolidated basis was $11.5 billion, up 26% year-over-year, primarily driven by Google-related expenses.
Dave, I'm sharing that screen now.
Factors
Okay, great.
here again this quarter.
Uh-oh. I can't hear you. Dave, we lost audio. We lost audio.
Maybe we can only have one shared source at a time.
Stick with yours. Stick with yours. It's fine.
We'll figure this out better for our next live stream.
$14.2 billion, with headcount growth being the largest driver of year-on-year growth for R&D and sales and marketing expenses. For G&A, the biggest driver of expense growth was attributable to a reserve for estimated credit deterioration as a result of COVID-19. Stock-based compensation totaled $3.2 billion.
They really haven't touched on anything yet, right?
No,
I mean,
this is the most generic,
again, the majority of
as if
new
nothing had
hires were
happened.
engineers and product
this is
Look at their
super
financials.
suspect. I don't have confidence that they're going to address it unless they are pushed to address it on calls. I really hope that analysts are ready to do that. I'm going to be
I
really
hope they do too.
year-over-year, excluding the
But we can
impact
see
of
that
the
the
EC
stock
funds in
is
the
down
first
to
quarter of last year,
1232.68.
for an operating margin of 19%.
And then after I was it up to 1266. Yeah, 1266.
$20 million,
Yeah, you're
Now
delayed.
1265.
losses in equity securities.
Hey, I'm in the money there. That's good for me. I'll take that.
OI&E in our earnings press release.
I like it lower, but I'll take it.
Of 11.9%. Net income was $6.8 billion, and earnings per diluted share were $9.87. Turning now to CapEx and operating cash flow. Cash CapEx for the quarter was $6 billion, which I will discuss in the Google segment results. Operating cash flow was $11.5 billion, with free cash flow of $5.4 billion. We repurchased $8.5 billion of our shares. We ended the quarter with cash and marketable securities of approximately $117 billion. Let me now turn to our segment financial results, starting with our Google segment. Revenues were $41 billion, up 14% year-over-year. I'll now go through the individual advertising revenue lines. Starting with Google Search and other advertising revenues.
Tell us what we want. I don't want to care about pre-pandemic. Who cares about pre-pandemic? Detail.
Up 9% year-over-year. This reflects strong year-on-year growth for the first 2 months of the quarter.
Good for you.
Revenues began to decline and ended the month at a mid-teens percentage decline in year-on-year revenues. Although users' search activity increased, their interest shifted to less commercial topics. In addition, there was also reduced spending by our advertisers. YouTube advertising revenues were $4 billion, up 33% year on year. Significant YouTube revenue growth persisted until late in the
So
first
she
quarter.
said mid-teens. She
Different
said
performance
started. You notice that?
Yeah.
Brand and direct
Started
response
to
components.
decelerate to mid-teens. Well,
Direct
where is it now?
response continued to have substantial year-on-year growth throughout the entire quarter. Brand advertising growth accelerated in the first 2 months of the quarter,
In the first
but
2
began
months,
to experience a headwind in mid-March.
headwind in
As a result,
mid-March.
by the
Huh.
end of March, total YouTube ads revenue growth had decelerated to a year-on-year growth rate in the high single digits. Network advertising revenues were $5.2 billion, up
Single
4%
digits,
year on
which would
year,
be 9,
with healthy
from
year-on-year growth
33%
for
down
the
to
first 2
9%.
months of the quarter.
But they were still
And
growing
in part,
YouTube
an
ad revenue is what they're
That's
saying.
the
network
deceleration
revenue in
and the
low
acceleration
double
rate.
digits. Turning to Google Cloud, including GCP and G Suite, revenues were $2.8 billion for the first quarter, up 52% year over year, driven by significant growth at GCP and ongoing strong growth at G Suite. Once again, the growth rate of GCP was meaningfully higher than that of cloud overall. GCP growth was led by our infrastructure offerings and our data and analytics platform. We're pleased with the ongoing growth in G Suite, which continues to reflect growth in both seat count and average revenue per seat. With respect to the implications of the global crisis for Google Cloud, we're proud of the accelerated traction we achieved across sectors, including public sector and healthcare for disease monitoring and control, working with leading retailers on demand forecasting, working with companies across media and communications to enhance their customer service, and across industries on supply chain optimization. In the first quarter, other revenues were $4.4 billion, up 23% year over year, primarily driven by growth in YouTube non-advertising revenues and Play. YouTube's contribution to other revenues benefited from subscriber growth across its various offerings. Within Play, app revenues continued to benefit from strong growth in the number of active buyers in the first quarter. In addition, in the latter part of the quarter, we started to see an increase in user engagement in apps as well as in digital content. Total traffic acquisition costs were $7.5 billion, or 22% of total advertising revenues, and up 9% year over year. Total TAC as a percentage of total advertising revenues was down slightly year over year, reflecting once again a favorable revenue mix shift from network to Google properties. Google operating income was $9.3 billion, up 1% versus last year, and the operating margin was 23%. Google accrued CapEx for the quarter was $5.7 billion, reflecting investments in data centers, followed by servers and office facilities. Moving on to the performance of other bets. For the first quarter, revenues were $135 million.
Why do they feel they need to read us something that we could read ourselves? It is so old school. Like, just stop.
Let me now
I know.
conclude with our thoughts on the impact.
And they
No one
won't,
has
they
time
won't
for
give
this.
us this
on our
information
revenues
other
and
than
investments,
listening to it. They
including
won't.
an
They're not
update on
typing
the
us out
outlook
and giving
I
a
shared
transcript
on our
of
fourth
this.
quarter
They should
earnings
have a
call.
15-minute time box, and then
We
it's
remain
Q&A.
optimistic about the underlying strength of our
Jordan, they
business.
do. Other companies do that now.
I know.
They don't do this
Our
anymore. This
products
is
play an
insane.
important role for consumers and businesses globally. This has been evident throughout the crisis.
We
in
can
the
read.
usage metrics that Sundar referenced earlier. We're humbled that users continue to turn to us.
It's
as much
holding
as
us
we do
hostage to
in a
listen to
time
their.
of global need and uncertainty.
Like,
Now, have they
very
monetized
seriously.
their YouTube video for
Users
this?
clearly are depending on us to provide useful and accurate information. They are looking to YouTube for information, education, and entertainment constantly as they study, create, and work from home. They are using our G Suite products to collaboratively communicate, connect, and work. Although users may not be focused as much on purely commercial activities right now, over the long term, the value we provide to billions of users globally serves us well.
so basically, users aren't interested in things that they can make money on right now, but over the long term, they will. Again,
Yeah.
did you notice that?
from our users in this extraordinary time.
That's a big red flag.
Redoubling our
Users are
efforts
not
to
focused
help
on
our
commercial
advertising
activities right
customers
now.
and partners by sharing insights and developing new tools to keep them connected to their customers and help them be best positioned for recovery. In terms of more specific product points, I will start with search advertising, where our financial results are driven in part by user search behavior. At the inception of the crisis, the increase
Let me just
in
guess.
user
Search
interest
volume
was
is up and ad rates are
about
down.
COVID-19 and related non-commercial topics. Although we have seen some very early signs of recovery in commercial search behavior by users, it is not clear how durable or monetizable this behavior will be. In order to gauge the ongoing potential financial impact to our business from COVID-19, a key signal to monitor is macroeconomic performance, which has tended to be correlated with advertising spend. As of today, we anticipate that the second quarter will be a difficult one for our advertising business. As we move beyond the crisis and the global economy normalizes, this should be reflected in our advertising revenue.
Hey, Chris, read that
But
comment.
it would be premature to comment on timing given all the variables here. In terms of Google Cloud, we remain very pleased with the execution by the team, reflected in the ongoing pace of customer adoption of both GCP, industry
difficult all we get,
and G Suite collaboration tools to
difficult
help businesses
and
operate
significant
efficiently and effectively. Moving on to profitability. While TAC and content acquisition costs are obviously tied to revenues, there is a sizable percentage of items in other cost of revenues that are generally less variable in nature, such as depreciation and operations costs of our technical infrastructure, as well as for activities like customer support and content review. Much of our operating expense is also not directly correlated to changes in revenues. Given that we are faced with a global crisis of uncertain depth and duration, we have been focused on taking steps to enhance efficiency, including slowing the pace of hiring and some categories of marketing spend, as well as further enhancing machine utilization. More specifically, with respect to the pace of hiring, last quarter I indicated that the rate of headcount growth in 2020 would be slightly higher than the 20% growth in 2019. We now anticipate a deceleration in headcount growth that should start to be visible in the third quarter and continue into the fourth quarter. Although we are focused on these and other steps to moderate the overall pace of investment, we remain committed to the long-term opportunities for which we are well positioned. So we will continue to invest in these areas, including search, machine learning, and Google Cloud. Finally, with respect to CapEx, on the fourth quarter call, we shared our expectation that investments in both technical infrastructure and office facilities would increase compared to 2019. We now anticipate a modest decrease in the level of total CapEx in 2020 compared with last year. The biggest change in our outlook is a reduction in global office facility investments due to both the need to pause most of our ground-up construction and fit-outs in response to COVID-19 and our decision to slow down the pace at which we acquire office buildings.
Short office rates.
Technical infrastructure, we expect a moderate reduction to our
We already knew that.
relative to the beginning of the year, given the impact of COVID-19 on data center construction delays, as well as the benefit of our ongoing focus on server efficiency. Overall, we anticipate technical infrastructure investment to remain at roughly the same level as in 2019, with relatively more spend on servers than on data center construction. Thank you, and Sundar and I will now take your questions.
Thanks for
Finally,
nothing.
questions.
Thanks for nothing.
As a reminder, to ask
Nothing.
a question, you will need to press
I
star
wish we could
1 on
ask
your
a question.
telephone. To withdraw your question, please press the pound key. To prevent any background noise, we ask that you please mute your line once your question has been
How
stated.
much was your ad revenue down year over year
And our
this
first
last
question
week?
comes from Eric
Hear it
Sheridan.
and let us go
Yes.
home.
That's it. That's
Your
all.
line
That's
is
all we
now
need.
open.
Thanks for taking the question, and hope all is safe and well with everyone on the team there at Alphabet. Two questions, if I can. One, on the comment with respect to direct response advertising on YouTube, we'd love to get a little more color on how direct response advertising as ad units continue to evolve and perform, and how advertisers are using those ad units as part of their broader advertising goals. And then maybe Ruth, for you, on the comment on expenses, just want to understand a little bit of how much of what you're messaging on expenses is efficiency gains that
Terrible
you were
question.
aiming for in 2020 before we got to COVID-19 versus elements of the cost structure that you're re-examining as a result of the
Who
pandemic.
hired this guy? Who hired him? What's wrong
Eric,
with you?
thanks for the wishes.
Oh.
On YouTube direct response, we definitely seen traction there. I think an area where it really works well, for example, is app installs. That's a great example of it. Gaming is another good example of it. And we are working on iterating and making the formats work better so that it applies to more context as well. But in general, I think businesses are learning to adapt. Obviously we've had great success with search, and so we're bringing a lot of those learnings, and we're sharing it with our customers. And so
He had that question pre-pandemic and has been waiting 2.5 months to ask
on
it.
your second
Yes,
question,
exactly.
I like the way you framed it. Yes, we
Either
do
that
have
or they've
efficiency
pre-screened what
efforts
they're going
that
to
we
ask and are
started,
only letting
that we had going
simple
as we entered
questions
this
through.
year. But as a result of what
No
we're seeing
future,
in
no
the
forward-looking
environment,
questions.
our view was that we should really double down on those. And so when we go through the various areas that I mentioned, we had started the year with an expectation about really optimizing headcount around the various areas. What we've determined is we're going to, at this point, slow the pace of hiring. To be very clear, we are continuing to hire, but we're slowing the pace of hiring, and that's helping as we're driving a deeper look into how do you optimize within each area. The same is true, for example, in some of the comments on marketing. We are continuing to invest in marketing. As you know well, sales and marketing line, the majority of it is headcount related, and we do continue to invest here in ads and in particular in cloud. As it relates to the marketing component, namely ads and promo spend, we did reduce it relative to our plans in the beginning of the year, and we continue to have a healthy budget for ads and promo, particularly in digital, to support many business areas. But as with the other areas of investment, we're really focused on optimizing across products and services. And with physical events canceled for much of the year, marketing spend is also reduced. And so, that's another example. With machines and servers, we've been focused on efficiency of the fleet for some time now. This is giving us the opportunity to push that even further. So we're looking at the operating environment and saying we should continue to lean into the efficiency programs we can. It does help us free up some.
Yeah, you lean into that. You lean into that efficiency program.
It is an accentuation.
I have to say, our commenters are the best. It's way more entertaining reading the comments than hearing what they have to say.
Yeah.
Here's another one.
Here we go.
Let's see if
Another
this question's any good.
Morgan, your line
JP
is
Morgan.
now open.
Great. Thanks for taking the questions. One for Sundar, one for Ruth. First, Sundar, you just talked about how once the crisis has passed, the world will not look the same. I'm curious if you can just elaborate a little bit more on how you think Alphabet comes out stronger on the other side of this downturn. And then Ruth, maybe taking the question on expenses a little bit further, does this give you any more opportunity to be even more disciplined or diligent on costs on the other side as well?
Oh my God. You gotta be kidding me.
How's that a question?
Thanks, Doug.
Just tell us how you're going to be better after this is all over.
They're just teeing up softballs.
I would be embarrassed if I were an analyst who had to ask that question. I don't even. Do we even need to listen to the answer? Should we just mute this until the next question?
I want to hear what he has to say.
Okay.
And that's
Here's how we're going to do better in the future after this is all over. But we're not going to talk about how we've done in the past 2 weeks.
In every place we see that trend, and so part of this is making sure our investments deliver value with respect to that shift. So if you look at advertising, people who in the past may have debated things like how do I get virtual showrooming, now are really thinking about it. People who may have been hesitant to shift their budgets are looking through moments like this and trying to get all
Dave, we forgot about virtual showrooming. That's the game changer for Google.
It's on the top of everyone's mind. I'm so glad they're bringing this up.
asking the questions deeper. For example, if you have data centers, they are fixed costs through something like this, and you learn going through a moment like that and just thinking about the opportunity harder. So across everything we do, be it search, be it YouTube, be it Play, be it cloud, I think we are investing to capitalize on this long-term opportunity. And I would say overall on Alphabet as well, when you look at investments like Waymo and Bing, you can imagine, in the future, these things working well, can play a significant role. And even the limited
thinking about Waymo right now, dude.
Through a moment like this. So we're betting on those big trends.
And to your other question, if I understood it correctly, you're asking about the durability of some of the efficiency efforts. I think that the way I would answer that is after a decade of growth, there have to be opportunities for added efficiency, and we've been focused on that for some time. But painful times like this put a spotlight on an urgency around making sure you're focused on the levers that you have, and hopefully those instill the right kinds of health metrics, et cetera, against which you're managing. So I would say that the intent most certainly is that these.
I'm just reminded every second of how I've been able to be so successful in trading the last 25 years, with how unbelievably stupid the street is, and the way they think, and the way they even just think.
This is what one of the major
we're not compromising where we need to invest for long-term growth.
Institutions in this country has to ask is, tell us how your company might come out ahead in the future after this is all over.
Thank you. And our next question comes from Heather Bellini from Goldman Sachs. Your
Goldman
line is now
Sachs.
open.
Great. Thank you so much for taking the question. Ruth, I have two questions for you, actually. First, I wanted to thank you for the color around the growth you're seeing as you were exiting the quarter in the ad business. And, there's been some signs from different partners or different companies that ad spending, while still down considerably, has actually improved a little bit, maybe some green shoots from the declines that you might have been referencing at the end of March. Any chance you can give us a sense of the type of growth you've been seeing for the first, kind of 3-4 weeks of the quarter, just to help level set us? And then just in regards to the provision you mentioned in G&A related to credit deterioration, is there a chance you could tell us the amount of that provision, and do you expect to have to do this again in the second quarter? Thank you.
Thank you for those. So,
asking about the growth at the beginning of the quarter, not the end.
As I said in opening comments, for our ads business, a key signal to monitor is macroeconomic performance, which has tended to be correlated with ad spend. And I think it's premature for me to comment on the trend. In terms of what we saw in the first quarter, as I said, for search and other revenues, they were up 9% year on year for the quarter, but in March, revenues began to decline and then ended the month at a mid-teens percentage decline in year-on-year revenues. And then with YouTube, we had strong revenue growth until late in the quarter when trajectories for direct response and brand diverged. And as I said, direct response does continue to have substantial growth throughout the quarter, while brand began to experience a sizable headwind starting in mid-March. So by the end of March, total YouTube ads revenue growth had decelerated to a year-on-year growth rate in the high single digits. And then, for the second quarter so far, I think it's premature to gauge given uncertainty in the environment, and a few weeks obviously is not a quarter. So in such an unprecedented crisis, I would not want you to extrapolate from just a couple of weeks. That being said, the decline in our search and other ads revenue was abrupt in March. And although we're seeing some early signs at this point that users are returning to more commercial behavior, it's not clear how durable or monetizable that will be. So, based on our estimates from the end of March through last week for search, we haven't seen further deterioration in the percentage of year-on-year revenue declines. For YouTube, direct response has remained strong. However, we've seen a continued decline in brand advertising, and it's really too early to add more. I think that the main point, though, is a few weeks obviously is not a quarter, and given it is such an unprecedented environment, I would not extrapolate from these comments for the full quarter. And then I'm sorry, you had the second question. Yeah,
the G&A. Sorry, no, that was very helpful. So thank you on behalf of everybody. And then just the G&A that you mentioned, the credit provision that you said you took. I just was wondering if you could share the amount. It might be in the queue later tonight.
It will be.
If you could share with us the amount.
It will be in the queue later.
Call.
It will be in the queue later tonight.
So
thank you.
It sounds like
Our next question comes from Michael Nathanson from MoffettNathanson. Your line is now open.
Thanks. I have one for Sundar and one for Ruth. Sundar, people have asked you about your priorities. You talked about it, but I wonder if you could step back and think about what this crisis will do to the other side, and maybe a reorienting of your priorities. So perhaps where you would shift spend in the long term to maybe take advantage of where this is going. And then Ruth, we appreciate the color on YouTube. Just want to dig in some more. If you can give us any sense of YouTube geographies, is there any difference by geography?
Who the hell cares so much about YouTube all of a sudden? What the hell is wrong with these people?
In terms of overall priorities.
Jordan, Dave, did you hear what I heard? So it sounds like
it's
15%.
15% year-over-year deceleration on ad spend, basically. That's what I picked up.
Yeah, so down 15% year over year, and no additional deceleration going into Q2 is what she said.
And I felt like she kind of leaned towards things were getting better, but she wouldn't really.
No, they see an uptick in more commercial type of search patterns that they don't know whether or not they'll actually convert to revenue.
Yeah.
So basically, 15% is the number it looks like, and it's holding, which is a little better than I anticipated. Quite honestly, I was thinking 20% plus.
She said mid-teens.
Is that what she said? Mid-teens?
Yeah.
So that gives her some wiggle room.
Yeah. So 13 to 17 is what I would take that as.
And 9% growth is what they had been seeing, and they went to a mid-teens decline. And YouTube growth decreased to a high single digits, which is like 8 or 9, from what they had previously seen in the 30s, I believe.
Okay.
And it was an abrupt change in March. Early signs consumers are returning to normal behavior, but they haven't yet been able to determine if that's something they're going to be able to monetize.
Yeah, that's all I needed to hear. So basically, based on that, it's certainly not good, but they're doing a damn good job of dancing around and fudging.
Yeah.
I don't see Google getting rocked tomorrow by any means.
No.
Hold on. I'm going to cover.
Yeah.
You're going to cover? So let's do some math on what your $2.5 million bet
geographic breakdown
end up costing you.
YouTube, we haven't broken that
down. Hold on.
Hey guys, I apologize. I've got to run.
Go ahead, man. I'm about to pop off. I'm just going to cover here and see what happened here.
All right.
What it cost.
Take care.
What I made.
Good luck.
What I made. What I lost.
As of right now, Google is up 4.99% after hours, after being down 3% today. Chris got in 5 days or so ago, and he's going to do some math. If you need to jump, Jordan, that's cool. We'll be back on Thursday with a normal morning episode, and I think we're going to do a Thursday after the market episode with Amazon's earnings results, because we are almost half of my portfolio is in Amazon, and I think Chris is in a similar situation.
Yeah, we got to figure out what we're doing there, Dave.
Let's see what this question is here.
Your line is now open.
Here's the next question.
Thanks for taking my questions. I have two. The first one, Ruth, just to go back to your comments around the early signs of improvements in behavior and search. I know it's early and don't want to over extrapolate, but just any more detail on the types of behavior you're seeing, of which verticals or which categories or which geographies where you're seeing sort of the first sign of green shoots on the search side. And then Sundar, to go back to your comments about the shift toward digital opportunities or digital transformation, maybe talk to us about, as you sort of look back over the last couple of years at what you've done on the SMB side, and what are sort of one or two of the key hurdles where you see you really need to invest and build more comprehensive SMB products for post-recovery?
maybe I can give color both on the SMB and a bit on the ad side too. On the SMB side, it's an area we've been investing for a while, and obviously we have assets both across AdWords, Google Maps, Google My Business, and obviously providing them with G Suite and the tools to get their business running. So I do think we have a lot of touch points, but the focus has been simplifying it, making it more of a one cohesive, easy.
Ameritrade is screwing me. I can't even get out. Like, it's not understanding my trade. It's saying I'd be over
AdWords experience so that they can get on.
Or it's having a hard time registering the trade that I made. I hate it when it does this, man. It's such a nightmare.
Technologies like AI to just make it all much simpler and seamless for them. And it's going to be a continued focus for us, and especially scaling this up and making sure it works internationally well as well.
So he took the second half of this question. The first half was about search recovery specifically. So hopefully they will address what is
you will
asked.
See us do more. On the ad side, a question, to your question about, maybe I can give more qualitative cover to what Ruth said earlier. And,
Ameritrade cost me $6,000 right there. I mean, just literally $6,000. I'm out. I'm covered. Let me see what I made or lost.
Primarily is that, it's an extraordinarily effective system. It's a transparent system. You have a very clear sense of ROI. It's very measurable, highly cost effective. And so we've always seen, and we saw this in 2008 as well, people respond in the short term, but the recovery is also fast when it comes back. And so it tends to work. It is very diversified, not just geographically by different verticals. And even through moments like that, we do see businesses responding to demand shift. And, so we see through our system, if people suddenly are looking for office furniture or even pajamas, the system responds, right? And so you see the dynamic nature of it. I mentioned earlier, people are really thinking about the shift to digital. So Philip and our ads team are super engaged with our customers, helping them think through the opportunities.
I'll pull it up. Hold on, Dave.
I gave an earlier example. If you're thinking about cars and you've been hesitant to do virtual car showrooming, now is the time you're beginning to have those.
It's the second time they're talking about this virtual car showrooming.
There are budgets which are shifting.
He's out of his mind.
Of a large customer. Maybe they've spent a lot of money on live sports. That is clearly on hold. So they are looking to shift some of those budgets into opportunities they see. But having said that, there are large sectors of the economy which are affected. Things like travel, and our large partners and customers are impacted, and so we clearly see the impact.
Trying to pull my trade, Dave. Hold on.
Ruth gave as well.
Great. Thank
Your line is now open.
Here's the next question.
Good afternoon. I'm curious if you could just give us a little more color across SMB and enterprise, any common threads you saw between those two segments.
Maybe, we have had tremendous momentum on G Suite, and if we can, all of Google works this way. Products like Gmail, Google Docs were built from the ground up to really help people be productive and collaborative in a distributed work environment. And so we are clearly seeing traction there. Google Meet is seeing great traction, and I mentioned some user momentum there, but we have more announcements coming up, including later this week. And so we are seeing tremendous traction and engagement on G Suite. On cloud, the shift to digital has been a deep trend, and if anything, people are,
Dave,
really engaged on it.
It looks like, sorry, I'm pulling up what I got these bought at. I basically bought it to cover between 13.12 and 12.96. Wait, no, I also shorted some in the 12.50s, 12.60s, and 12.70. No, hold on. Yeah, 12.70s, 12.78. It looks like my average cost of that short was probably right around 1285 to 1290, and my average exit was right around 1300. So I probably lost about 12 or 13 bucks a share on 2,000 shares. That's about a $24,000 loss on that trade. So I took about a $25,000 loss on the Google short hedge. I also took, let's call it, we'll see what happens tomorrow. I mean, I'm still alive in my options trade, but total at risk is about 50 on the options. I think it was like 48 or 49 on the options trade. So I'm going to be, I'm down 24 right now. I could be down as much as 75 on the whole trade. I'll know tomorrow. You'll know tomorrow, guys. If it stays where it is right now, I'll probably lose a third to half of that options trade tomorrow. So
and it looks like we've had some comments. The other stocks, Microsoft, Amazon, they're all going up on this Google news.
That's
so
positive.
we could have a big day for the broader market and specifically the NASDAQ average.
But honestly, they're up on this Google news. What on earth is this Google news anyway? People are out of their mind. Like, the market is insane. There is no Google news. They literally came out with no news. They like gave us a tiny bit of, we're seeing a tiny bit of search behavior that is moving from junk search back to commercial search, but we don't know if we'll be able to make enough money.
We don't know how much, and we don't know if we're going to make any money off of it. And we can't give you a percentage of how much our total
going through a moment like this,
search sales are at all this week compared to last week, compared to the week before that.
Ben, I can get another 1,000 shares to cover my put. I can do that. The problem is that opens me up if something else happens and the market starts to think like I'm thinking right now, and they're like, that was just a hype call, and we're selling off into the morning, and Google's down a couple hundred. Now I'm down 4x more than I would have lost in my option. So I'm totally fine keeping the option. I'll exit in the morning. It should have some premium value left on it. I'm not concerned. I'll probably lose half of what I have in that option. But anyway, guys, this is not a catastrophe. This is not awesome, but not a catastrophe at all. In terms of its relative sizing for us of a loss or gain, it's barely even a needle mover for the day. So
if you talk about how much you lost just in other stocks in your Amazon position while the market was down compared to how much you lost today.
Well, I'll just talk about that real quick before I get off here, because I gotta hop here in a second. But today, in general, just to give you an idea, it was a down 300 day. Okay, so today's a down 300 day. So this added 24 to that. So it's not. Excuse me. It was probably a net difference of about 24 here.
And my day, that's not possible. Hang on.
Oh, are you about to get real depressed right now?
No, mine was down 145. I saw a positive number, and that was like a total. That was not a day number. So yeah, I was down 145,000. You were down about 300,000. But on this particular trade, not bad. Less than a $50,000 loss.
Dave, our next show is going to be an Amazon earnings show, right, on Thursday?
Well, we're on Thursday morning. We have to do something, and then Thursday after the bell, we're going to do.
I can't do two shows. Let's just do one show on Thursday. Now we can start our Amazon earnings show a little early, and we'll talk about some other stuff. But guys, join us on Thursday. Today was a loss. Okay, today was a loss. It didn't work out. We're long on them. We'd have to lose a lot in Amazon at this point.
How much? How much? So this is our $2.5 million episode. What is our? How much money do we have in Amazon right now? I can tell you right now, I have $3 million in Amazon.
Me, it's 5.5, 5.6 or something like that. So yeah, so collectively with Jordan too, we're at 10. So we'll be at our $10 million Amazon trade on Thursday.
Just for some perspective, you lost $50,000 on Google today. I lost $25,000 of option premium on my Amazon calls that expire on May 1st.
Dave, you might get some of that back in the morning. Don't give up.
I think I will. I will.
All right, listen,
guys. Yours this morning.
Guys, thanks for doing this with us. The first time we ever did it. I think Thursday hopefully will be not as disappointing. Maybe it'll be actually equally as good on the good side, on the long side. Maybe even better if Amazon has a really strong show. So, hey, give us a thumbs up, guys.
Smash the like button. Be sure you subscribe if you haven't already. We are Dumb Money. Thank you guys so much for watching. We will see you on Thursday.